Walk me through the reducing of methane emissions you guys are committing to. What's the conversation? Is it just about methane emissions? Is it about diversifying your product mix? What's your bet on climate change?
Well, oil and gas and energy and agriculture and everything have such a huge role to play in this. About 4 years ago, we got together as companies during Climate Change Week and said we need to get together and work on climate technologies. You can't do everything, but one of the great things about, important things about methane, it's a really potent greenhouse gas. So is CO2, but so is methane. So we put our shoulders together and started working together, reporting it, and developing the technologies to measure methane. We know it's really important. Natural gas has got a great role, a really important role in climate change and the transition, combining it with renewables and other things. Got to make sure it doesn't leak. So satellites, drones, technology, infrared, companies coming together, and now 3 big U.S. companies have joined us.
And the other part of that story is the diversification of Big Oil's portfolio into alternative energy, new energies. JP Morgan had a report out talking about the fact if you guys have to spend more money on new energy and you still have to keep your oil and gas business running, that the CapEx budget will bloom, and that's not a good value to shareholders. How do you view it? No, we have to keep the discipline in the capital spending. We can't shift completely and spend money without real care. In our case, we've got $500 million a year of renewable spending going on, 6,000–7,000 people working in renewables. But this will be a long wavelength transition. The dual challenge in the world, 2 billion more people by 2050. 1 billion people on the planet today do not have electricity. You can't quite visualize that here in New York. And the emissions have to be down by half. So we have to do everything.
So as I understand, this is voluntary among the energy companies. Do we need national governments to get us where we need to go? I talked to the governor of Colorado yesterday who said that there is a coalition of people to deal with methane, actually, that they got together voluntarily. Apart from the EPA, apart from the national government, do we need the national government? Can we get this done other ways?
We're doing it because it's good business. I mean, you keep the methane in the pipes, burn it very efficiently. It's good business for us to do that. We believe in good regulation, but we're not going to wait for regulation as companies. And I really am a believer that natural gas has to be the transition with coal. There's a coal-fired power plant being built every week in Asia. That's this epicenter of climate change, and natural gas would be a natural to be able to go in and work in Asia. So let's move to the broader conversation of the oil price. I talked to the CEO of Equinor earlier today and asked him about $100 oil, and let me play a clip for you of what he had to say.
We need to be prepared and be resilient towards much lower oil prices. So that's how I think about it. There's no right or wrong oil price. $100 spike, you see it? It could happen, definitely. It's happened before, it could happen again. But that's a little bit too much. $100 oil spike, do you see it?
It's possible. I mean, I'd like to think that's not what's going to happen. There's a lot of uncertainty and volatility in the next month. What is going to happen with the Iran sanctions? Is that oil going to come off the market? Or is it going to go back on the market? So you could see a volatility up, you could see one down. Oil prices feel high to me. Overall, the stock levels are low, so there is some upward pressure here. But volatility is the word from now to the end of the year.
What happened the last time with Iran sanctions? Because isn't that the first time this has happened? Did the oil come off of the market or not? Could that instruct what will happen this time?
I think there's more pressure on the Iran sanctions this time because you get into the financial system, whether it's the Chinese, the Indians, the Japanese. The sanctions are such now, they're going to have a hard time leasing the ships and the insurance to actually move the oil, even if people said they would buy it. So everyone's being cautious.
And it's condensate and it's oil, which is different than last time, and it was just really the crude product. What are the longer-term implications of this for you and for the market?
Well, we're going to continue to plan our company within that disciplined framework. You know, the oil prices have come back up. I think the industry is not off to the races now spending capital. We'll be really careful. Stock levels are now down below the last 5 years of average. So the industry must invest enough to provide the energy, but can't get out of the frameworks and then lose the credibility again. It's quite a delicate move forward here with the companies.
Has the ultimate control over oil price, insofar as it exists, shifted from Saudi Arabia and perhaps Saudi Arabia and Russia over the United States?
Well, I think you've got three countries out there. You've got the United States, Russia, and Saudi Arabia, all about 11 million barrels a day. Saudi can probably flex more than the other countries, and the U.S. is market-led. It's bottlenecked right now. So it is truly the market working right now. We'll see.
And talking about America and the opportunities for you, you guys are putting a lot of effort into not only projects, but you're also having an annual meeting in D.C. It feels like you're really just pivoting and shifting your focus in particular to North America. What is the opportunity set?
Well, for BP, it's an important company in the U.S. It was built out of some of the big mergers with U.S. companies. 40% of the capital employed and shareholders are here in the U.S., and we just made another one, finally having the confidence to make a significant investment with BHP in the U.S. We produce about 700,000 barrels a day in the U.S., Alaska, the Gulf of Mexico, onshore, refining, marketing. It's a really important place for us.
So can you rank it? Like if you have U.S. shale, but you also have deepwater, where I feel like your costs are coming down for deepwater, and there's more availability of supplies, for example. Where would you put? Like, how do you rank? What excites you the most?
Well, right now, existing production in the Gulf of Mexico with all the infrastructure there, those are the highest margin barrels in the world for us and other companies as well. With shale, we're just getting started. We have a big shale gas business, and you can optimize that at 1 or 2 cents an MCF. But now we can take the talents of a good team and put it on liquids in the U.S., and I think that'll be more and more important.
You have to make investment decisions over a long period of time. How do you account for electric vehicles? Because we see a wide range of estimates about how fast they're going to come and how big they're going to be. How do you really accommodate that in your investment decisions? What do you anticipate?
Well, we've got 5 or 6 scenarios. There will be lots of electric vehicles, particularly in the cities. We just bought the largest electric vehicle charging company in the UK. We'll have them on what they call the forecourts there, and they're around London. You combine it with retailing. We interface with 13 million customers a day. So it'll be liquid fuels, electric fuels, and retailing. But in terms of solving the climate change issue with electricity, which will come, you can't just replace that with pollution and move it outside with the power. So I think people forget electric is purely clean. It can be clean, but you can't move it with a coal-fired power plant out in the country and say you're solving this issue. Right,
and you still need cobalt, and that comes from the DRC, so there's that knock-on effect also. So broaden it out for global trade. With the issues between the U.S. and China, have you seen any direct impact on where your oil is going?
Not yet. The crude flows still continue to move. Global crude is really a global market. The Iran sanctions may have more impact. We see more impact with Venezuelan production and Libyan production off. Those are the big things that affect trade flows today in oil. We see some impact of sanctions. We see the cost of steel going up, for example, with what we're doing in the U.S. by about $100 million. But for now, the impacts are not there. The market is anticipating things, but that's where the volatility comes in, because nobody's sure right now.
Fair point. What about with LNG? You mentioned China, obviously a voracious consumer. Have those trade flows that you've noticed started to shift?
There is some talk about not bringing LNG from the United States to China, but actually LNG, about 1/3 of the gas out there is actually like a global commodity like crude, and it can move from other places, Africa, the Middle East, throughout Asia will move to China without big dislocations. It could slow down some natural gas projects in the United States. I worry a little bit about the one in Alaska, which would have been probably destined for China, but let's see.
Are you seeing a reduction in investment in things like LNG facilities because of the uncertainty surrounding trade?
We've seen a reduction in the investments in LNG globally in the industry because they overran their costs for a while. So now the discipline is, if you're going to build them in phases rather than the giant projects, is probably a better way to project manage them. But there are projects on the cards around the world.
How do you see the short-term implications of sanctions on trade flows? We talked about that earlier. China and India, everyone thought they were going to keep buying. Now we have indications that's not the case. Europe, though, coming in saying, we're going to try and keep doing business with you, Iran. What oil gets backed out? Like, is there a backstop for Iran?
Well, I think the issue, if China and India and Japan continue to buy, it is that infrastructure which can be affected by this. So are the ships out there that wouldn't be subject to the sanctions, the insurance behind the ships, all that I think is the big question mark. So it doesn't feel like it, but if the U.S. granted some exemptions here for a period of time, suddenly that would open that up, and that could affect that's one of those things that could affect the price on the downside.
So how tight then is the market short term? Obviously, because the issue is if the Iran oil is taken off, then the North Sea oil is going to wind up going to Asia and India, for example, and that's going to tighten the market. How tight is it?
Well, stock levels are down. They're certainly not empty. I think Saudi Arabia has the ability to bring more oil on the market fairly quickly to moderate it. But if this went on for a prolonged period of time, you can see the stock levels coming down. And that's because demand continues to go up.
Does it? Even if we have a trade war impact, even if we have an emerging market sell-off if the Fed raises rates, what is your demand forecast?
Well, if you took 1.5 million barrels off the market, or 1 million for Iran, we see it affecting world demand by about 175,000 barrels a day of growth out of 1.5 million today. So not a giant impact unless it's really prolonged.
The thing that freaks you out the most?
Cyber.
Really?
I think it should everybody. Yeah, not a BP thing. I mean, cyber is the thing that you just worry about for your own companies and the world.